Ajay Bijli, CMD at PVR, joins in to talk about how their quarter has been. Ajay, hi, good afternoon. Just going through your numbers. Let's talk about the bad news first. Your PAT has declined by about 22.5% thereabouts. Why is that? Because I'm guessing what a Rock On, a Dear Zindagi couldn't do, maybe a Rais and Dangal would have definitely made up for that. So why this decline in the PAT then?
Well, Rais, by the way, got released in January. These are results up to December. And Dear Zindagi and movies like Kahani 2, Rock On 2, Force 2, all these movies came exactly bang in the middle of demonetization. And the only movie that did well in the last quarter was Dangal, which got released only when the 9 days of the quarter were left. So given the fact that still demonetization actually sort of had an impact of every single business, I thought that we still did very well with the kind of numbers that we got. We still got about 18 million people, 1.8 million people, 18 million people as compared to 16.5 million people in the same period last quarter. Our ticket price has remained at roughly 200 rupees. Our SPH, which is the spend per head, has gone up to 83 rupees as opposed to 77 rupees last year. Our revenues on sponsorship have gone to 78 crores, up by about 13% compared to last year. So I think it's been a fairly decent quarter, given that how the entire economy got impacted by demonetization and so many transactions, popcorn, Pepsi, buying tickets, everything is done by cash.
Yeah, I stand corrected on Rais because the promotions have been so strong. You just see Shah Rukh Khan splashed everywhere. So I thought maybe it's the previous quarter. So now that the effect of demonetization...
I think you got a soft corner for Shah Rukh Khan, so I don't blame you.
Well, you got me right on that one. But I was just wondering that now that the effects of demonetization are sort of done with, and we're seeing things get back to normalcy, and I'm guessing Rais's impact would reflect in the quarters ahead. Would you say that the period of demonetization is now over, or are you still seeing a bit of a lingering impact?
Well, January has been fantastic, absolutely. I mean, January number of people who visited our cinemas is more than 72 lakhs. People have already visited, so which is more than what we got in December, which is unprecedented because January typically is a slow month. But we are seeing that the digital penetration has increased dramatically, both on the ticket sales as well as in F&B. And I think things are normalizing now. Now it's just a function of movie flow and whether the content that gets created or released connects with the consumer. And we are seeing that even in February, we've got Jolly LLB coming on the 10th, we've got Rangoon coming, and right up to 10th March, this new film, Badrinath Ki Dulhania, that's coming. English films are there. So I think fourth quarter, which is generally slow, is going to be better this year. And demonetization impact is really getting reduced now.
Hi Ajay, Avan joining into the discussion, sounding very promising for that movie pipeline. So apart from Shah Rukh, we have a load of actors according to you. So let's just look at your numbers in greater detail. Margins have remained flat and can't really blame it given the kind of impact that we've seen on the note ban. But I want to know the margin trajectory going forward and what is the outlook as well on advertising revenues?
Well, advertising is going to continue to remain strong. And as I said, last quarter is typically slow. But because January has really been very promising, it's going to be much better than what it is every year. And margins, we still did about 16.5% EBITDA margin, and which is again same as last year. So I think about 18 to 20% margin is something that will continue to deliver in the years to come.
Ajay, no movie is complete without Coke and popcorn at PVR. So tell us about the F&B revenues. Where do you see the trajectory headed and what share of the revenue pie are they going to form in the next quarter?
Well, like if you look at this quarter, 11% growth has been there. It was 74 rupees roughly was our spend per head previously. It's reached about 83 rupees now. And we continue to focus on quality. We are continuing to focus on strike rates. We've introduced a lot of organic food, makhanas, the way we are selling. So I think F&B is going to be a very big contributor. About 22% of our income comes from F&B, and a lot of focus is there, and that will continue to remain like this, or even continue to grow the way it's been growing every year.
And let's talk a little bit about the digital storm, the Netflixes of the world that have hit us. Does this have an impact on the moviegoers' experience to come to a theatre? Does it have an impact on footfalls or spends per head? And what is your outlook on market share within given the light of competition that we're seeing as well?
You see, movie-going culture in India is very strong, and you're still dependent on the twin engines of what I call supply and demand. So on one hand, you have 500 to 600 films, which includes your Hollywood films as well, regional films as well, coming through the pipeline. And on the other side, you've got this insatiable demand for people to go and watch movies. Plus, we are protected by the windows. So all these other formats that you're talking about, Amazon, Netflix, and other formats, basically they can't release a brand new movie after it has done its theatrical play. Also, 60% to 70% of the revenues of any content that gets created comes from theatrical release. So I think till such time, budgets of movies are also high. So how do you recoup your cost if you straight away go to other formats or the platforms where people can watch? So granted, these platforms are there, but they're there for people to watch on the go. But as long as we do a good job of giving a great experience to the consumers, and also mall development, mall culture, going out habits of people, I think movie theaters, not just because I'm in this business, are here to stay, and people will continue to come. But of course, we have to play a big part in ensuring that experience is differentiated. Therefore, if you look at PVR on seating comforts or technology, on customer service, on F&B, we don't compromise at all, and therefore we do continue to get the numbers that we're looking for.
Ajay, why is it that, every now and then there's such heightened speculation that the promoters may be looking at selling either part or whole of their stake? Just recently we heard about the Chinese Wanda Group as well. Have you been in discussions with anyone? Have you been approached by anyone for a stake buy?
Not at all. I mean, the speculation, wherever it's coming from, it has to be asked to the people who are speculating. There is no such plans at all. I'm continuing to run the company. I enjoy what I'm doing. I'm passionate about what I'm doing. The whole organization is geared up to take the company to another level. So these are all rumors which should be just dismissed.
Whatsoever. Okay, Ajay, no, I just want to talk about the recent deal as well. Warburg Pincus, 820 crore rupees for 14% stake that values PVR at almost 6,000 crore rupees. Tell us a little bit more about, what this means, getting in such a big PE firm with such a strong track record. What does this mean for PVR?
Well, if you look at the entire journey of PVR right from 1997 to 2017, it's going to be around 20 years. We've always been able to grow the company with the grace of God by the support of private equity funds, which was ICICI Venture. After that, Renuka Ramnath in her avatar and multiples, L Capital. Everyone has supported the company, and that's why we've been able to grow the company. So in this particular instance as well, when private equity funds come, they also have to be facilitated with a very good exit. And one of Mrs. Ramnath's funds had completed 4 years, and she also was looking for a very small part exit. And we were very keen that anybody who comes also should be of repute, and actually we're very honored and flattered that somebody like Warburg Pincus has come, and they've still seen a huge amount of growth potential in the company, in the industry. And they've come in at the price that they have, which is pretty close to the price at which the company trades at currently. So it's really a testimony to the belief in the industry, the Indian market, the Indian consumer, and PVR. So this is very much part of our growth story and our growth journey.
Okay, good to hear that. And Ajay, great speaking with you today. This is coming after a long haul, and we hope to see you more often on the channel.
Nice talking to you as well. Thanks very much. Thank you.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.